Welcome back to the NJCPA Tech Talk podcast. Back here, episode 10, double digits. Can you believe it? I can. And our NJCPA podcast right here today is brought to you by the Emerging Technologies Interest Group. So I'm really amped here today for an excellent conversation on everything crypto, one, but actually trying to hone in on one aspect of crypto that really has become a hot topic as of late. But a brief introduction on me. I'm your host, Stein Smith. I do a ton of stuff, blockchain, crypto, everything IT, from RPA, AI, automation, blockchain, crypto. I'm very active in the space. Probably anybody tuning in has had to hear me, deal with me, or interact with me somehow as it pertains to blockchain, crypto stuff. But I won't bore you anymore on that. But I'm really amped to have today on the podcast, episode 10, double-digit podcast episode, Joseph Joey Ryan, who is a colleague, who is a friend, and a real expert in everything crypto. And so I'll hand it over to him for a quick background on himself, on his journey, right, from a normal audit type person to a two-time CFO of actual crypto companies. Joey, happy to have you, man.
Thanks, Sean. Yeah, always a pleasure being on with you. Friend, I like that we're at that level now.
Oh,
no, but it's
should I go back and
no, it's great. No, I'm glad we air it all out here. So always great to be on with you, and yeah, happy to be on and happy to share my crypto knowledge with all the CPAs tuning in. As Dr. Sean said, I am a CPA, former Big Four auditor, was in the public accounting realm for over 10 years before kind of diving into the crypto space, going down the proverbial crypto rabbit hole back in 2017, 2018, and haven't come out since. So happy to share some of the knowledge that I've learned and some of the hot topics, talk about some of the hot topics that accountants are facing today with individuals and businesses that are coming to them with some of these issues that they're facing in the crypto space.
Absolutely. And so probably the sort of opening question, right, that I have for you is, how hard was it to pivot from being a Big Four auditor, right, a cog basically in the audit pipeline, to becoming a co-founder of a firm, one, and then a co-founder of a firm, Gilded, right? That was really operating in a whole new area prior to your current role at TrustSwap.
Yeah, I mean, it's definitely a pretty large pivot, right? When you're, as you say, kind of a cog in a wheel at a Big Four, kind of living that proverbial Big Four life, gradually moving up the ladder, et cetera, dealing with clients, dealing with deadlines, kind of living that corporate life per se. And then kind of all of a sudden moving into the fast pace and the Big Four and the public accounting life is definitely fast paced, but moving into a extremely kind of fast paced, learn as you go startup environment. That was kind of a huge pivot / huge learning curve that I definitely had to undertake. But I felt like the opportunity had presented itself, the timing of kind of the market had presented itself, and the timing of where I was at in my career was kind of right for me to make that move. And at the time, we had actually just gotten into a startup accelerator program that was actually up in New York City, and it was a 3-month program. And that program actually really helped me develop kind of the necessary skill set to operate and learn how the startup environment truly works and operate at my peak efficiency in the startup environment. I would equate that kind of 3-month accelerator that we were in, it's a TechStars accelerator, so similar to Y Combinator or the large kind of startup accelerator programs. Those are like crash courses in basically entrepreneurship, right? So you're getting kind of a 3-month, if you want to say, an MBA or a graduate level course in how to be an entrepreneur, and that really helped again develop those skills that I've needed then and have been using since then to co-found and bring Gilded to where they're at today, and now working as the CFO and helping guide TrustSwap into the future to be the kind of all-in-one platform for businesses and individuals to be able to transact and utilize digital currency going forward. So With that said, yeah, big pivot, but like I said, the opportunity presented itself, and I was at a time in my life when I was able to make that jump, and yeah, happy to that I did, and happy to where I'm at today.
Awesome stuff there, Joey. And also to just echo on that point, right? It honestly does highlight that, even a individual whose background isn't audit, tax, or any one area can pivot, transition, and grow into a co-founder, sort of higher level type of individual in any industry, right? New or a current one out there. So I always have to sort of point that out also. But the area that I really want to sort of pick your brain on here today, Joey, is this whole idea of NFTs, right? And I know, and I do know that you and I are on task forces, working groups all over the place. And so in a conversation over the last couple of weeks, you had really sort of talked about some of the real underlying issues trying to get NFTs to work, right? From a bookkeeping, valuation, audit point of view, but probably off the top first, what is a NFT, right, for our audience out there?
Yeah, so starting at the very high level. So NFT, what does it stand for? Non-fungible token, right? So what does that mean? Just for anybody that's familiar with crypto, basically, Bitcoin, Ethereum, any sort of token out there, one for one, right? If I own one Bitcoin, Sean owns one Bitcoin, it's the same tangibly, right? We can trade the Bitcoin with each other. We're holding the same thing. It has no physical or intangible difference as to the Bitcoin that Sean holds and the Bitcoin that I hold. Now, non-fungible token, that's exactly what it means. It means each individual token that is held is different. It's coded differently. It is unique in what it is and how it's coded into the blockchain. So if I hold one NFT, Sean holds another, even if they're the same picture, whatever it may be, they are going to be uniquely different, encoded into the blockchain. They will each have their own differences. So why is that important? What this really unlocks, and where I think NFTs are going to be going, is really, we're starting with this art, JPEG, CryptoPunk, Bored Ape, Ape Yacht Club phase of things, and you're seeing kind of the art and the creative space initially be the ones that kind of take a hold of this NFT space. But I think where this ultimately is going to lead is you're going to see this opens up the fractional ownership, right? So you can have large pieces of real estate, different businesses, obviously, et cetera, et cetera, et cetera. All sorts of different use cases for fractional ownership, with when everybody's holding a unique NFT that's a specific token or representation of ownership of a specific either tangible or intangible asset, right? So it opens up a lot of unique opportunities where you have fractional ownership, or you have uniquely identified characteristics of a person. So you could have NFT like social security cards, NFT birth certificates, NFT real estate property titles, etc. Any sort of blockchain digitized certificate of proof of existence is an NFT in itself. So I think where this is going is you're seeing, again, the art and kind of the fun stuff as to how this is starting to be kind of explored and played with, and the boundaries are being pushed in many different directions. But I think ultimately it leads to this kind of more digitized world that we're heading towards, with, if you want to say, even like into the metaverse, that kind of thing. So that's my opinion, but that's where you can see where this is going. So everybody's saying, oh, well, it's just art, or it's just JPEGs, why not just screenshot it and then I have to pay $10,000 to buy this thing. I mean, yeah, it is right now a collectible phase, and collectibles do have their place in this, right? Collectibles are always going to be around. People will pay thousands or millions of dollars for baseball cards, right? And those are literally just pieces of paper, or any other collectible. You're going to have this phase where people value them. Value is what people, is in the eye of the beholder. What somebody values is different than what somebody else's values. So that's where that kind of niche of collectible comes into play. But I think these initial NFT experiments are kind of stretching those boundaries, kind of stretching the experiment of how this is going to go. And I think as it evolves over the next months and years, that's where you're going to see this going, kind of entering into the full kind of business, governmental, social phase going forward.
So it kind of strikes me that, and I know that there has been quite a bit of conversation, right? That NFTs are a joke, right? That's to echo on your point. It's a picture of a picture or a picture of a tweet, and then how is that worth $25,000, right? How is that picture of some artist or some athlete worth anything? Because I can go online and I can watch it, but everything has to have its opening bid, right? It's sort of opening innings, sort of its first quarter, right, of applications. And I would say that honestly, and to try sort of build on that if I have NFTs, right, linked to tangible property, right, real estate, other physical assets, even patents, copyrights, other intangible assets that actually have normal external valuations, right? How does that complicate it, right? As far as individuals, institutions, folks trying to do valuations, audit these things, try to figure out tax impacts of them, how does that change the conversation around crypto, right? Because right now crypto is basically everything is taxed, and the audits are still a work in progress. But how does this transition of NFTs into more tangible assets really amplify all of those issues?
Yeah, so what it really does is it really forces accountants and anybody that's kind of tracking and monitoring the transactions that occur to really get nitty gritty with the actual data for the transactions that are occurring. So right now, some of the challenges with tracking NFTs for, if you want to say accounting and tax purposes, is how does the NFT actually evolve, and where do the pieces of the NFT, for instance, for like a marketplace, right? So when an NFT is sold, the process of listing an NFT on the marketplace, paying the actual seller the proper revenue, the revenue stream going from the buyer to the seller, the marketplace getting their cut, maybe there's an agency involved, they're getting a cut, having that kind of all integrated into a smart contract that releases kind of the crypto payment as it's paid, tracking all of the activity, kind of the ins and outs for the flows of when an NFT is minted and when it's transacted with or utilized within a smart contract, and then when it's ultimately kind of stored in the new custody wallet of the buyer, and then going through that whole process again when it's exchanged. Being able to track each individual transaction and understand the ins and outs, the inflows and outflows of the proper data is really hard to, I would say, from an accounting perspective, is really hard to, I guess, the proper word here is track and identify the exact proper inflows and outflows, identify exactly when, if you want to say like revenue recognition occurs, when a taxable event occurs, at what point in time does it change hands, how much crypto is involved in that transaction, how much of the portion is going into your wallet, et cetera. All of that from the interaction with the smart contract is not the easiest data to pull, especially when you have a marketplace. If you're doing the bookkeeping for a marketplace and you have hundreds of NFT transactions a day, trying to kind of scrape that data is where one of the biggest challenges occurs right now. And that's where at Gilded, we just released a new, what we're calling NFT ops platform, where you're able to really visibly see that data from a accounting standpoint, accounting level, to be able to easily identify specific inflows, outflows, and to be able to manipulate and manage that data and be able to perform analysis on that data to understand, not just from an accounting perspective, what our expenses were, what our revenues were, what our costs were, the inflows and outflows there, but also understanding, the activity that's occurring on the platform. So there's a lot of data. There's a lot of data out there that's kind of up for grabs. Creating the right systems around that data to be able to properly analyze from an accounting perspective and properly kind of utilize and that data to the maximum benefit. That's where a product like NFT Ops and some other products that are being launched out there to help with kind of the NFT accounting, that's where you're going to see some maximum leverage occurring in the CPA accounting space.
So it kind of strikes me that even though the mainstream conversation around NFTs is around NBA, Top Shots, and items like that, that actually on the back end to actually get NFTs to work as an actual financial instrument, right? As a real asset class by itself, there's actually quite a bit of work to be done, right?
Yep.
And all of that work and building out the workflow, trying to track all of that data, right? To your point, also does echo sort of overarching trends that are already underway in every aspect of advisory services, audit, tax anyway, right? Because as we all know, right, you, me, and everyone tuning in here knows that our jobs, our roles, our firms are more and more based around how to manage, track, validate, and to do so in a consistent way, all of that information, right? Right. That's linked to transactions, be they crypto, be they NFTs, honing in on that, or other types of transactions out there. So at the end of it all, it isn't terribly different from trying to track the massive increase in information that all of us are trying to handle anyway. All that we're doing is then adding in, right, some extra hot sauce here in the form of NFTs.
Yep, exactly. And completeness and accuracy of the data, all my fellow auditors out there, the completeness and accuracy comment for when you're utilizing a data set to perform kind of auditing functions. Same thing here, right? How do we make sure the data that we're extracting is complete and accurate? Mm-hmm. And that's just one aspect, right? From the actual bookkeeping, or if you want to say the reporting side of things, the whole other can of worms is valuation around NFTs. And I see Dr. Sean kind of giving a smirk because this is a very hot topic where a lot of people don't even know where to get started. And that's, we're very much just scratching the surface on how to value NFTs. And that's, I think we have a long road to hoe to get everybody on the same page and get kind of regulatory bodies, I think, on a correct page, or at least put out something that says, okay, here's an initial procedures or guidelines around the valuation process or valuation aspect for NFTs. So it'll be interesting to see where that falls and how that comes about in the next months and years going forward. But yeah, that's definitely a hot topic, and I know you have a few thoughts on that as well, Sean.
Everyone knows that I always have thoughts, Joey. But to just echo on your point there, I would say that honestly, having the policymakers and us be on the same page is optimistic. I'd be happy having us in the same book to actually start, right? But there is obviously, right, quite a bit left to do, right? Because to your point, right, these non-fungible tokens means that a lot of the work and the processes and the overall frameworks that all of us use to value other assets don't really work, right? Because one share of Apple stock equals one share of Apple stock, and even private companies, there are always to do that level 1, 2, and 3. And there are different tools out there to try to help us value assets, whereas NFTs, by their nature, are all non-fungible, right? They're all individual items that have to be valued, as of right now at least. Hopefully this will change going forward, but all have to be valued as a ad hoc item, right? So it's a one-off, basically.
Exactly. And the challenges around the valuation today is massive, and like we said, we have a long way to go. And right now, it's kind of best case or best use case, or accountants that come to me or individuals that come to me asking about valuation. I say, hey, right now your opinion is as good as anybody else's. That's, if you stand on the reasoning as to why, and it's pretty logical, and there's some underlying data to support that. Right now, that's as good as anybody can put out there. So it'll be interesting to see where that goes in the space. And like you said, getting the regulators or standard setting bodies to agree on anything is never easy to begin with, and definitely very optimistic. As you say, just getting it in the same book would be nice. So it'll be very interesting to see how that unfolds in this space. And as we talked about before, this is the first inning. This is, we're early in the ball game. We've been early in the crypto ball game. Now we're early in the NFT ball game. First innings here, really discovering where this is going to head and how it's going to impact society as a whole going forward.
Yeah, no, and I mean all right, so actually on a off the record question here, Joey, right? Just you and me here. How can we create a NFT of the NJCPA Tech Talk podcast? Could you help us with that?
Oh, absolutely.
Right.
Mint it. Nice. Yeah, well, let's do it, and we can start selling these, and we'll create a nice little community here. It'll be good.
There we go. Love it. And so how can folks out there who are curious try to learn more, right? Because there's obviously quite a few open items out there in terms of the bookkeeping, compliance, external reporting, valuation, taxes, audit, IT side of things. But if you want to learn more, right? Because now, Bitcoin is a great headline maker, but it's kind of old hat right now, right? It's old news, right? Because we all get that. Hopefully we've all heard of it at the very least. But if there are individuals out there, firms, partners, MDs out there who are curious as to how to learn more about NFTs, are there any go-to places for those folks to start to have that process get underway?
Yeah, absolutely. Teeing it up for the Gilded blog is a great initial resource for CPAs looking for and accountants looking for more help or guidance on NFTs and the accounting for NFTs. So Gilded has recently put out a few blog posts on kind of NFT marketplaces, accounting, et cetera. That's a initial great place to go to visit to start educating yourselves. The AICPA has put out some pretty good material recently on blockchain. They're starting to dabble a little bit into the NFT space. Typically, I would expect something big from them to come out soon, kind of on NFT accounting and some opinions there. The Wall Street Blockchain Alliance will tee that up. Sean and I are both active members in the Wall Street Blockchain Alliance. We've put out some guidance or white papers or working papers around DeFi NFTs that recently came out. That's a great place to go ahead and do some more research on or dig up some research, as well as Sean himself with being a friend here, promoting a friend. Sean is a contributor to Forbes and has put out some articles around NFTs as well. So I'd say, those areas are great to start for any accountant looking for more information on NFTs and where this is going.
Awesome stuff, Joey. And all right, so I have you here, you're on camera, you're on the record, right? So I have to ask you, your 2021 year-end price prediction for, of course, Bitcoin.
Everybody wants to know, right?
Everybody wants to know, including me. So
what are we at today? I haven't looked recently. We're still at 57-ish.
I think 55. I think we're a bit off the highs, but yeah, 50 plus right now.
Yeah, I mean, so typically in the past, September has been a pretty down month, and then Q4 starts a little bit of a run up. So wouldn't be surprised to see another little run up here, especially with NFTs being kind of the hot topic du jour and everybody getting into the NFT space. So you could see Bitcoin and Ethereum pumping another 20%. So Bitcoin maybe to 75. Everybody at the beginning of the year talked about Bitcoin to 100,000 by the end of the year. That obviously could happen if we have a significant run up, but I wouldn't be surprised if he hits 75 again before the end of the year, and then we'll kind of see how it rides into 2022.
All right, heard it here first. And Joey,
not financial advice.
No, never any financial tips on this podcast. Absolutely
No.
not. Just a few housekeeping items here for all of our folks tuning into this podcast. Just, always have to sub to the NJCPA Tech Talk podcast in your favorite podcast app. We're on YouTube at youtube.com/NJCPA. We're also online at njcpa.org/Tech Talk. And if you are a NJCPA member, hopefully all of you are, Joey also, absolutely, join the Emerging Technologies interest group at njcpa.org/groups. Joey, it was awesome having you on here, and I am going to have you on during the first quarter to come back and hopefully confirm your year-end price target, and to also catch up on everything going on, DeFi, NFTs, and all the rest going forward.
Absolutely, yeah, love it. Always great to be on with you, Sean, and yeah, looking forward to coming on again. I'll come on Q1. Hopefully, I'm right, and then we'll have some more followers, I guess, trying to figure out what the next price prediction is.
All right, Joey, awesome having you on, man. Thank you so much again.
Yep, thanks, Sean.